Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. In the last 24 hours, the Australian dollar has failed to stage any significant moves to the upside and at present is still contained by the resistance of 71.60. I do view towards this level as a potential sell, as you can see from this channel that the recent break of 71.40 does give us a further downside potential to 69.40.80, and I see that as the objective before any turnaround. With the ADX also posting a very strong trend, it does expect to see the decline very soon and limit any advances. The initial support at intraday outlook of 70.60, and as I mentioned, 69.40 to 80 is viewed as the objective. Looking to the euro, a little mixed overnight. It did post a long-legged doji after stabbing towards the top side. But since the rebound of 115.2030, the demand has remained somewhat subdued. At present, the hurdle at 116.75 is still likely to preserve any initial advance, although the market is likely to be wary above there at 117.55 to 65. With the peak at 116.43, the greenback was also weaker and slipped to a low of 94.89 before displaying a slight rebound at 95.05. Still to come this week is the European Central Bank rate decision. The ECB previously announced its intention to wind down their QE program by the end of this year. Then later this week we have the release of the US inflation numbers for August, to which the US Federal Reserve will be watching closely, as I do expect to see a rate hike towards the end of the month, around the at the meeting of the 25th and 26th, should I say. So the strategy is still to sell rallies, and I do expect to see the market take out the level of 115.20. And once or if we do see, then I do expect to see a fall towards the region of 113.70. For those trading dollar yen, I do advise to possibly start raising your stop losses. As we approach the 111.80.90, I do anticipate some profit taking and likely to see a reversal from there as previously seen. I'm not overly bullish on dollar yen, and as you can see, still contained by that level of 111.80.90, could see a turn back towards a support at 110.75.80. If breached, would expose the lower region of 110. Now, overnight, news sources reported that China would seek to authorization from the World Trade Organization, or the WTO, to slap sanctions on the US as trade tensions between the two largest world economies grow. At present, with both nations showing no signs of backing down from the trade dispute, the Trump administration is planning to impose tariffs of $200 billion worth of Chinese goods, and along with that, an additional $267 billion, while China promises to retaliate. So as I mentioned, I do expect to see the market fail towards the top side. Interesting price action for this pound, as you can see, although it has broken above the 130.40 level, failed to stage any significant moves and posts a long-legged doji. For some of us, the long-legged doji is a candlestick that is often used to signal indecisiveness about the future direction of its underlying view, with the overnight high posted at 130.86. At this point, should still keep short positions intact. My stop is above there, and if we do break above 130.90, then that negates the bearish view. At present, we're still seeing that level hold. Now, later this week, the market is wait and see outcome of the Bank of England's September rate decision and the statement. It was also announced that the Bank of England's Governor Mark Carney has extended his term at the helm to 2020, and no doubt we'll see the Brexit divorce through that period to his retirement. At present, though, the support is seen at 129.50.55. Now, a break beneath there, which is where this trend line is, will give us further indication to the downside and look towards the region of 128.20.25. And as I mentioned, above 130.90 would leave me neutral. Looking to the gold outlook, the market has staged hardly any move, although it did briefly look towards the low of 1,187 overnight. My view is still neutral, and no doubt the market is consolidating at this level or around the region of 1,180 to 1,200 until we get the FOMC meeting, which is, as I say earlier, it comes out on the 25th, 6th. So the market will no doubt be seeing if the Fed is looking for a tightening, not in September, but also in December. Wrapping up with the oil, well, the market surged overnight due to the Hurricane Florence, which is threatening the US East Coast gasoline line, and also with the expected landfall later this week, could be the strongest storm to hit the Carolina in 60 years. Let's see how the market plays out today. If we still see further rises, then we could see a market up to $70 to $71. But if we get it closed under $69, then this would negate the bullish move and keep the bear focus to that trigger level at $67 a barrel. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report, and I hope you enjoy the rest of the day that's ahead.